Hello everyone. Welcome to this presentation on business responsibility and sustainability reporting, commonly known as the BRSR framework. My name is NVS Pawan. I am a chartered accountant. This presentation is a part of the deep dive series into the BRSR framework. To understand the fundamentals of the framework, I would recommend you to watch my previous video on BRSR overview. In this presentation, we will dive deep and look at the disclosures under the section A of the framework. Section A of the framework consists of 7 parts. This section helps the stakeholders to get a context of the nature and scale of the operations of the entity. This is a prerequisite to understand the sustainability related impacts and performance of the entity. In this section, the first part consists of the details of the listed entity. The second part consists of details of its products and services. The third part consists of the details of operations, basically the location of plants, offices, types of customers, etc. The fourth part is an elaborate disclosure about the diversity of the employees. The fifth part has details about the holding, subsidiary, and associate companies under the listed entity. The sixth part is about the applicability of corporate social responsibility to the entity. And the seventh and the most important part consists of transparency and disclosure compliances. We will go through each one of these parts in detail in subsequent slides. The first part is the details of the listed entity. We will take a look at these disclosures in section A, taking a live example so that it becomes easy for us to understand. Here I have taken an example of Asian Paints Limited, and this is the BRSR report filed for the financial year 23-24. The first 10 bullet points consist of the CIN number, the name, the year of incorporation, registered office address, contact details, and the paid up capital details. Point number 12 to 15 are relatively more important, where the entity gives the contact details of the primary resource person for this report, and it also discloses the reporting boundary which it has used for this sustainability reporting. Reporting boundary can be a standalone basis or a consolidated basis. Reporting boundary is important, particularly for the disclosure under Principle 6 on greenhouse gas emissions. Point number 15 talks about whether the listed entity has taken any assurance on this sustainability report. Here we can see Asian Paints has taken reasonable assurance on the BRSR core and limited assurance on the other KPIs. Part 2 consists of details of the products or services of the listed entity. These activities must account for at least 90% of the turnover of the entity. The details mentioned here have to be in line with those filed in the form MGT 7 with the Ministry of Corporate Affairs. Now we come to part 3, which has the details of the operations. Here the company has to disclose the number of locations of its plants and offices. The SEBI guidance actually requires an exhaustive information about all the plants, including address and contact details. The second point is about the market served by the entity, which may be international or national. Even here, as per the SEBI guidance, disclosure of all the names of the states and countries need to be mentioned. The next bullet point under this is about the percentage of exports to the total turnover of the company. Here we can see Asian Paints has got a percentage of 0.2%. Here, the SEBI guidance expects the entity to disclose the future planned initiatives towards exporting its products and services. The last bullet point in this part is a write-up on the type of customers for the entity. This can be B2B or B2C, which really depends upon the nature of the product in which the entity deals in. Coming to part 4, this is an elaborate disclosure about the diversity of the employees in the listed entity. The first bullet consists of a segregation of employees and workers into male, female, permanent, and other than permanent employees and workers. Other than permanent employees or workers are those who are employed for a fixed term, that is, a specified time period or completion of a task or a project. They could be employed directly by the entity or through a third party contractor. Permanent employees and workers, as we know, are regular employees and workers employed for an indefinite period. A similar distribution of male, female, and permanent and other than permanent needs to be given for persons with disabilities. The Persons with Disabilities is defined by the Rights of Persons with Disabilities Act 2016. The next bullet consists of participation or representation of women in the board of directors and key managerial personnel. Board of directors and key managerial personnel are defined as per section 2 of the Companies Act, and here the entity has to mention the number of women in the board of directors and KMPs at the end of the reporting period. The next interesting bullet is about the turnover rate of permanent employees and workers. Turnover here is with respect to leaving the employment either voluntarily or due to dismissal, termination, retirement, or death. Turnover rate can be defined as the number of persons who have left their employment divided by the average number of persons employed during the year. It is to be noted that this is the only disclosure in the framework which requires disclosures to be given for 3 years. And if there is any significant change in the number in the comparative years, an explanation to that effect needs to be given. I analyzed 1080 BRSR reports filed for the financial year 23-24. With respect to women participation in the workforce, the biggest revelation was that 60% of the entities had no women participation in their KMPs, which is the highest level of employees below the board of directors. Now, this is a great scope of improvement for the listed entities. Next, coming to part 5, which is the disclosure about the holding, subsidiary, associates, and joint ventures of the listed entity. Here, the entity has to disclose the nature of relationship it has and also the percentage of shares it holds in these subsidiaries. Another thing is whether these companies participate in the sustainability initiatives of this listed entity and are included in this sustainability report. Part 6 is a simple disclosure about the applicability of Section 135 of Companies Act, that is related to corporate social responsibility. The question here is whether CSR is applicable to the listed entity, what was its turnover and the net worth for the financial year for which the reporting is being done. Now we come to the last part, which is part number 7, transparency and disclosure compliances. The first bullet point under this part requires a company to present the grievances and complaints received from the various stakeholder groups like the investors, the shareholders, the employees or workers, the local communities, customers, value chain partners, or others. Here the requirement is to report whether there is a grievance redressal policy and mechanism in place for each of the stakeholders, the number of complaints filed during the year from each of the stakeholders, and the number of complaints which are pending for resolution at the end of the reporting period. There is a remarks column which essentially is there for the entity to give an explanation for these pending complaints at the end of the reporting period. A comparative figure is required for the previous year. Before we take a look at the last bullet point of this disclosure, let us understand a fundamental concept, the concept of double materiality. Materiality in the context of sustainability is defined as the most significant impact. It is of two types, impact materiality and financial materiality. Impact materiality is the most significant impact which the organization has on the environment and society due to its direct operations or through its value chain. For example, an entity having operations in a water stressed area is withdrawing water without replenishing it. Such entity has a negative impact on the local community and also the biodiversity. Financial materiality, on the other hand, is the most significant impact of the sustainability factors, including the environment, society, and other stakeholders, on the business operations, and thus having a financial implication. In the same example, the entity having operations in the water stressed area is always under the risk of lack of water for its operations. Having understood the concept of double materiality, let us now come to the last bullet point of part 7. Here the listed entity needs to present all the material sustainability topics identified by it which can affect its business operations. So this is a section in the framework where the entities talk about topics related to financial materiality, that is, effect on the business operations due to sustainability factors. Now these material issues identified need to be classified as a risk or an opportunity or both. The entity needs to give a rationale as to why it has categorized these sustainability topics into a risk or an opportunity. If it has categorized it under a risk, then it needs to give an approach to adapt or to mitigate the risk. Again, such a risk will have financial implications. So a qualitative disclosure needs to be given on the financial implications. These financial implications could be on the demand for the products or services, on the operational costs, on the investment opportunities, or any other financial implication. As per the SEBI guidance, in this column, companies should not make any forward-looking quantitative statements. Quantitative statements are only allowed if it relates to previous years. Here we can see Tata Motors has identified climate change as a risk and also an opportunity. Climate change is a risk because it can severely hamper the operations of the company. It is also an opportunity because Tata Motors is in the electric mobility sector. Environmental regulations have been identified as a risk because it increases the compliance cost, and also by chance if there is any non-compliance, it can have severe reputational damage for the entity. My analysis of the 1080 BRSR reports brought out the 5 biggest risks identified by the entities across all industries. They are ethics and corporate governance, employee well-being, climate change and environment, technology, and supply chain. These are the sustainability factors which entities believe will have maximum impact on their business operations. So that's all about the disclosures in section A. To summarize, this section helps the stakeholders to get a context of the nature and scale of the operations of the entity, which is a prerequisite to understand the entity's sustainability related impacts and performance. In the next video, we will discuss section B, which deals with the policies of the entity and the top management's approach towards sustainability. Thank you for now. Bye bye.